What's going on, everybody? I hope you're all having a beautiful day, and in today's video I'm talking to you about your low interest rates and monthly mortgage payments and how they're a lie. We are all hearing today that interest rates are at all-time lows and you have to take advantage of it. The problem is there's something on the flip side that many don't know or have even heard of, and that's what I'm sharing with you in this video. Now, owning a home is great, but getting unexpected expenses, now that sucks. In this video, I'm gonna protect you from that. Now, as always, guys, if you get any value from this video, please hit that free like button and we're jumping right into it. So as we all know, low interest rates have been a strong factor for these rallies that we're getting into this market right now. In real estate, prices are all-time high. In the stock market, prices are all-time high. In business, people are doing well. And just generally speaking, everything is doing great. Or should I say great? I feel like it's all artificial, but that's for another video. Now, the lower the interest rates are, typically the more stimulated the economy is. It basically encourages people to take on more debt, and more debt means you can grow because you can pay more and you can do more. And the more debt you take, the bigger you can grow. If you do it right, of course. Now, the problem with that is real estate is heavily dependent on interest rates. The lower the rates are, the higher the market grows, and the higher the markets are, the lower the market goes. As you guys can see right now, the housing market is brutal. Business is brutal. Real estate is brutal. The stock market is brutal. But in this video, we're talking about real estate. And you know, guys, if a house gets listed on the market, it flies off the shelves. This has a lot to do with having low interest rates. Everyone's trying to lock in those good rates. Because if they don't now, they're afraid later it's going to be way higher. Now, when interest rates start to get higher, people start to second guess buying a home, and actually many people can't even qualify to buy that home that they want. Something else that I want you to know about is low interest rates and high interest rates define your purchasing power. This means how much of a home can you actually buy, because if you're taking a loan from the bank, they typically look at your income and how much can you afford to take on as debt. So when interest rates are low and your monthly payment is low, this can define how much you can buy of a home. Let me show you. So an easier way for me to explain this to you is to show you. So right here we have a mortgage calculator. We're going to say that the house is for $500,000. That's the cost of the house. We're going to say that your interest rate is 3% and your term is 30 years. Now your monthly payment is $2,108.02. Now we're going to flip this. We're going to say that now instead of a 3% interest rate, your interest rate is going to be 5%. Look at how more expensive your monthly payment just became, $2,684.11. Now, we're going to take 3% back here. We're going to put $393,000, and we're going to make this 5%. I didn't want you guys to get lost here. Now, look, the $393,000 at a 5% interest rate for a 30-year loan is $2,109.71. This is the same exact monthly payment that we had at a $500,000 home. Let me just recap that again so you see. $2,109.71, $500,000 at a 3%, $2,108.02. Now, hopefully that didn't confuse you, but basically the house that you were going to buy for $500,000, if the interest rates go up from 3% to 5%, for getting that same monthly mortgage payment, you can now only afford a home for $393,000. Do you guys see what I mean by interest rates define your purchasing power? Now that you do, I'm getting to the step of exactly why this video is even made, how your low mortgage rates and how your low interest rates are really a lie. Now, your monthly mortgage payments when interest rates are low lets you get a bigger, nicer, prettier house, right? But how much bigger and nicer and prettier do your property taxes look? Your property insurance look? Your property maintenance look? How much prettier does that look? How much prettier does your utility bills look? See, everybody gets so caught up with their monthly mortgage payment, and no matter how low interest rates are, they're going to try to maximize as much debt as they can take to get a bigger, prettier house, not realizing that there's so much added expenses that you aren't even noticing hit you yet. Because I know something for a fact. In Dallas-Fort Worth, Texas, where I live, a $500,000 home versus versus a $393,000 home will be substantial on your property tax bill and on your square footage size. A $500,000 home, you'll be paying $14,000 a year in property taxes versus a $393,000 home, you'll be paying $11,004 in property taxes. Now, of course, this is different from district to district and school to school, but you guys get what I'm going. This is the rough ballpark. That's a difference of $2,996 every single year, or about $249.66 every single month. So almost $250 in added expenses because you were so happy you got a low interest rate, yet you went and bought a more expensive home to offset it. This is aside from your utilities and maintenance, now considering that those are going to be more expensive because the home's more expensive and more than likely more bigger. Electricity, gas, and water for a smaller square footage house is not going to be the same like it is for a bigger house. Maintenance for a smaller home is not going to be like the same for a bigger home. It's simple to have a 1 5-ton AC unit versus a 2 5-ton AC unit. It's as simple as paying the guy to cut your grass $5-10 every single 2 weeks more than you would for your smaller house because now your bigger house has a bigger lot size. It's as simple as that extra restroom that you barely used but it clogged, or now it had a freeze because of the winter and the pipe busted. It's as simple as your AC units needing service versus having one being serviced. Now you got two you have to service. It's bigger than just your mortgage payment, guys. There's so much more that goes into it. People are celebrating because they got the low interest rates, yet they're getting slapped on the back end. Why do you think house prices are so expensive right now? Aside from all the stuff going around in this world, it's mainly because low interest rates. People are so happy they can get a lower mortgage payment and they can get a bigger house, and a bigger house means living better. But on the back end, when bills start piling up and you start stressing because you didn't expect all this, I don't think that's living better. I think that's living worse. Yes, today the bank approves you because the rates are low. Yes, you get a nicer home, but are you ready to deal with all the bills that come with it? Because you just had an option to get a $500,000 home at a 3% interest rate, or get a $393,000 home at a 3% interest rate. Because we spoke about that if you bought a $500,000 home with a 3% interest rate, it would be the same as if you bought a $393,000 home with a 5% interest rate. So instead of you taking advantage of getting that $393,000 home at a 3% interest rate, you decided to maximize your debt and go up to a $500,000 home. But imagine you didn't over leverage yourself and you did buy that $393,000 home with a 3% interest rate. Now you get cheaper bills, a cheaper mortgage, a cheaper down payment, cheaper closing costs, and life just seems so much more comfortable than it was when you tried to get that bigger home, trying to max out every single penny that you can get from the bank. And I don't personally think that's the right move to make. So there you have it, guys. This is why I believe the low interest rates and a good mortgage payment in today's market sounds so good, but it's really not that good. And hopefully this woke you up to realize that you got so much more than just buying a more prettier and bigger home. There's a lot more that's tacked onto it. Sometimes over leveraging yourself and trying to get the maximum debt you can get to get a bigger home isn't the best move you can make. Today you got your job, tomorrow who knows? And of course it's going to be a lot easier to manage a home that's a couple $100,000 cheaper than the home that you bought maximizing yourself. So for all of you out there trying to catch that low interest rate, do that, but be smart with it and make sure that you get something within reason. And for all of you who can't afford it, even with the low interest rate, take a step back and don't borrow money. Don't try to just go buy a house because rates are low. I would rather pay for a pricier thing when I have the money than to pay for a pricey thing when I don't have the money. Do you guys get it? A pricier thing when I have the money versus a pricey thing when I don't have the money. Meaning it's okay if you have to pay a little bit more, at least you'll be better off. At least you'll have the reserves and you're actually prepared versus now you're going out and leveraging everything you can. So there you have it, guys. I hope this video helped you. If it did, hit that subscribe button, hit that like button, and most importantly, share this video with someone else you think would benefit from it. Thank you all so much for watching this, guys. Be safe out there. And for right now, I'll see you all later. I'm out.